Hello everyone, welcome to this week's live stream. I'm David Jones from Capital.com. If you've not attended one of these before, it's we have a quick look at some of the major stuff to watch next week, the major announcements. There's a lot of inflation stuff out next week, and then we jump into the platform and take a look at what's been going on with the markets this week and where the opportunities might be next week. And once I've done that, I go into the questions and answer any questions that you might have about markets that you want looking at. I did say last week, for me, the interesting markets this week were the dollar index and the S&P 500. And I do wonder, this is the S&P, I do wonder with the strength that we've seen in the S&P over the last few days, are we seeing this market reversing the correction? Don't know, but I think it's another interesting one to continue to watch into next week. We'll take a look at it in a bit more depth in a second. Let's get the risk warning done. This presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.9% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, next week, it's quite a lot to watch next week. I've picked out some of the major ones. So on next Tuesday, UK unemployment data could be interesting, given that the pound is down at almost the lowest since the mid-1980s. Be interesting to see what that looks like. US inflation. Clearly, inflation is the big theme for markets at the moment. We saw a fairly aggressive rate rise by the European Central Bank this week. So US inflation on Tuesday. Followed by, on Wednesday, UK inflation. So Tuesday, Wednesday, a lot of inflation data. And then Thursday, Australian unemployment data comes out. So those are some of the major things to watch next week. Let's have a look at just a quick bit of housekeeping on contact details. To find out more about the company, go to Capital.com. Any questions, drop me an email, david.jones@capital.com. You can follow me on Twitter, @JonesTheMarkets, and go to my website jonesthemarkets.com to find out more about the training course that I run. Follow Capital.com on YouTube, Twitter and Facebook. As I mentioned last time, I'm leaving Capital in about a week's time, so this is the penultimate, I think, market outlook with me. There'll be one more, I think, next Friday. I will be doing some other stuff to do with trading from October onwards, and if you follow me on Twitter is perhaps the best way of staying in touch with all the stuff I do there. So there you go. Right, let's get into it. I'm going to start with stock markets. I'm going to start with the S&P 500. So for me, I think what was interesting here, and I was saying it last week, the recovery that we'd seen by stock markets off the June lows, mid-June lows, around 3650 on the S&P, rallied up to 4300. That is a sizable move, a much bigger rally than we've seen all of this year. And I just wondered, was this the start of a recovery in the S&P? But the test would be, how far does this sell-off go? And I wonder, with the weakness we've seen up until earlier this week and the bounce back, are we seeing the S&P making a base again and gonna springboard higher from here? So I think it's a really interesting market to watch. I did buy the S&P yesterday, and I bought the DAX on. I did buy the DAX Wednesday, I think. So I have increased some of my exposure to stock markets. We'll see how it goes though. But I think it's going to be really interesting to see what happens next week. We could get some volatility definitely, because we've got all this inflation data out next week. But interesting to see if 3,900 ends up being something of a line in the sand. I think if we break below 39, then the risk is a deeper sell-off, and I'll be watching these old lows. But for me, the whole thing now is, do stock markets not take out their lows for the year? That's the thing. So I'm sort of definitely more bullish than I've been in stock markets for a while. So that's the S&P. If you have a look at the NASDAQ, what's the NASDAQ called? US Tech 100. You know, similar sort of moves in the NASDAQ, similar sort of stuff. So, you know, it's come well off last November highs at 16.8. Trades down to 11.2. Good bounce back, but again, sold off. And again, the last few days, we've seen something of a recovery. So again, I am sort of leaning towards perhaps we'll see further recovery for these stocks. So not in a straight line, plenty of volatility, of course. But, you know, if I was looking for a target now on the NASDAQ, my target would be up here rather than down there, if that makes sense. So I think for me, for my approach to trading, for me anyway, there's more probability this market is going to rally back up to those August highs rather than go crashing down to the June lows. But of course, no one knows, and that's what stop losses are for. So we'll see. We'll see how it all works out. But I think it's quite interesting, the moves we've had in stock markets recently. So that's that. Let's do the DAX. I'll show you why I did the DAX trade this week. I did mention it last time round, actually, and I actually pulled my finger out and did it. I saw someone in the comments say, you must be crazy buying the DAX a week ago. Well, there you go. I've done it. So for me on the DAX, you know, the trade setup, the lows for March were in at 12.4, let's say. Came back to it again in July, and we've come near to it again in September. So again, I just wonder, is this now a floor for the DAX? So for me, it was a good trade in terms of risk reward. Stopped the other side of 12.4. Bought, I can't even remember what I bought in. But interesting to see if we do get a push back up to at least 14,000. You could absolutely argue that on something like the DAX, is that trend is still just about down off the highs right at the beginning of January. So, you know, I don't think it's going to be plain sailing upwards for stock markets by any stretch of the imagination. But I think it's interesting what's gone on with markets over the last couple of weeks or so. So for me, stock markets remain interesting going into next week. FTSE, I mean, the FTSE just does its own thing, as I always say. You know, we're in a big sideways range for the FTSE. We have been in a big sideways range for a year now. You know, it's had a good day today. There's nothing for me. I think, like I said last time around, I never trade the FTSE 100 myself. I'd much rather trade the S&P. But clearly, when it gets knocked back towards 7,000, it's a buying opportunity. Up at the top, 7.6. It's struggled all the way this year. That's it. I've not got much else to say about the FTSE, to be honest. And the Japanese market, the Japan 225, quite a bit of a strange year for the Japanese market. But again, for me, the case of being a buyer on dips still. You know, if we look at these lows from March, you know, the market has managed to shake off this downtrend. It's broken out in August to its best levels since January of this year. So for me, I would still be a buyer of dips for the Japanese 225. But like I say, the market that I watch every day and the only one I care about when it comes to stock markets is the S&P 500. And I just think it's interesting that we've had the sell-off. We've held above some pretty major levels. Let's see, can the market build a base here and try and move its way higher? So I think that's an interesting market to watch into next week. The other market, of course, the dollar index. I think I've said numerous times over these live streams, you know, how much I enjoy or how much I always, you know, will watch the dollar index, and it's been a great market over the last 18 months. You know, from May 2021, this great trend. I've had various trades on all the way through. It's sold off a bit in the last few days. You know, it punched out again to a 20-year plus high. It sold off. I would absolutely still be a buyer of dips like I have been for the last year and a half on the dollar index. So if we get a sharp sell-off here, it's quite interesting actually, because I suppose, you know, it broke out. We had a bit of a breakout trade through the old high. Breakout trade there, pushed higher, and it sold off. For if you were of a more short-term approach to me, you know, it's arguably a trade here, you know, with a stop. Maybe we'll do it. The low before the breakout, this is on the hourly charts, the low before the breakout was a 107.24, maybe there's a trade here. So what I'm going to do, the market's broken out and it's pulled back. This was good support before the breakout. Let's do a trade. So we'll put a stop the other side of 107. Why have I got this set up this way? Okay, we'll buy it. Where is it now? 108. Let's buy. Let's say I'm going to buy 108.70. 108.70. Going to put a stop loss 106.80. So the other side of that low before the breakout. And the usual risk is £100 on these live stream trades. So we're going to buy 60 contracts at 108.70. Put a stop at 106.80. Bang. Let's put that order in. Let's see what happens with that. So no, I think I think the dollar index is always an interesting market. It's been a fantastic year. It's been a safe haven. It's been a hedge against inflation. So yeah, I personally think it's still far too early to call for the end of dollar strength when only 3 days ago we saw the thing hit a 20-year high. So yeah, interesting market. Trends all very much still in place for that. Pound against the dollar hit its lowest level. Where did it trade to? It traded just below 114, or actually just down to 114 a couple of days ago. Which is the lowest level. It briefly, very briefly, poked below the March 2020 low. So the March 2020 low. It poked below that, so it hit its lowest level since 1985. The trend is absolutely still down, pound against the dollar. Personally, I would not be a buyer because the trend is still down. I would be trying to be patient, sit on my hands. Do we get a rally, maybe up to 118, 120, and look to go short? So let's see what happens with that. But we need to see an absolutely significant rally to stop this downtrend for pound against the dollar. My only worry, and I think it is a fair worry at the moment, are we at sort of peak bullishness for the dollar? Are we? This trend has been in place for so long now, and are we getting maybe a bit complacent with the fact that the dollar is just going to continue to strengthen? So that it's exactly at times like this when everyone thinks the market is a one-way bet that it absolutely stops being a one-way bet. So perhaps we'll see a bit more to and fro over the next few months. But for now, at least, with the pound hitting its worst level just 2 days ago, since 1985, if I wanted to be a buyer of the pound, I'm going to be a bit more patient and wait to see this trend actually ended. But the downtrend, still very much in place. Euro dollar, similar story, of course, with the euro against the dollar. It's staged a bit of a recovery over the last couple of days. But if we look at the big trend from May, on this chart from May 2021, that trend is still down. Even if it rallied 800 points from where we are now, that trend in the euro is still down. So again, for me, my preferred trade on the euro would be to sit on my hands, wait to see if we get a rally and sell the rally, just to be patient. And I saw someone mention dollar yen. Will dollar yen recover? Well, will the yen recover? Well, again, I'd say if we look at dollar yen, it's getting absolutely killed by the dollar. The yen's getting killed by the dollar, isn't it? And again, it's only a couple of days ago that we've seen, a multi-decade high for the dollar against the Japanese yen. So, so for me, I would absolutely still be a buyer of the dollar on dips against the yen. Absolutely, that would be the trade I'd be looking to do. Because let's not forget, just in case you need reminding, most people lose money. And what are most people doing? Actually, there's a bit of a shift there, but still, look at the split. We've got this really obvious trend on dollar yen that's been going pretty much all this year, but 48% of our clients who have a trade on are short. So they've been the wrong side of this move, yeah, and racked up, I'm sure significant losses. I bet it's the same for pound against the dollar. I bet, pound against dollar, really obvious trend. I bet there's a lot of people long though. Oh, that's horrific. So, we've got this massive downtrend, pound against the dollar. More than 70% of people who have a trade on are long. So they're losing money. There's a great bit of insight there as to why, most people lose money. Most people lose money trading, 70 to 80%. And why do they lose money? I would say there are maybe 3 or 4 key reasons. One of the big reasons is they trade against major trends. They see a market sliding and they buy it. They see a market rallying like dollar yen and they sell it. As human beings, we struggle to trade with the trend, and that's a big reason why a lot of people lose money trading. So there we go. So we've had more dollar strength this week. None of these major trends have changed from my point of view. So that's it. Bit boring, those markets, I think. But for me, I continue to watch the US dollar and look to buy a dip. Gold. I did a trade on gold yesterday. I'm actually in a trade on gold at the moment from 1705 last night. The market's moved up a bit today and it's come off since then. But looking at the medium-term view, there is absolutely an argument, I would suggest, for thinking about being a buyer of gold, around about 1700. We've got this, what's basically been a floor for the price of gold going back to April 2020. 1660, 1700 has held the price of gold up. I'm not in a rush to buy it from a medium-term trade, because for me that trend is still down. But if gold is going to turn around anywhere, then this is the place. So it's interesting. I think if it loses 1660, I think it could be a case of look out below for the gold price. But I think this is an interesting market from a medium-term point of view to watch over the next few months and weeks and months, to see if we get something of a turnaround from the gold price at these levels. So I'm long based off an hourly chart. So I bought in yesterday, about here. It's 5 o'clock yesterday, 1705. It's really tanking now, isn't it? But I do wonder if it's trying to build at least a short-term base and a short-term recovery from here. We'll see, but it's really getting hit. The dollar must be rallying. So that's gold, but interesting on the daily charts. Silver. I hate silver, as I often say. Least favourite market. The trend is still down on silver, although it has staged a good recovery over the last week. But for me, the trend is still down. It did trade as low as July 2020 low, so a 2-year low we saw in silver. I would absolutely sell a rally in silver. Saying all that, the disclaimer is I haven't traded silver myself and my own money for about a year and a half, because I find it a really scrappy market to trade. But for me, that trend is still down, and it could have further to run on the upside, but I'd rather be a seller than a buyer in silver at the moment. Let's take a look at crude oil and natural gas. I think it's interesting with what's going on with crude oil at the moment. I think this is an interesting market to watch the next few weeks, because I did wonder, I think I've drawn that trend line slightly differently. If I drew that trend line correctly, this is the trend line going back to April 2020 for oil. It did really tank below that a couple of days ago, the price of oil. And if I'd have been watching oil, I absolutely would have been a buyer at 87, 88, whatever, and would probably have got taken out in that move. So we did see oil just yesterday trade to its lowest levels since January of this year. It's a big move. So is oil now starting to threaten this longer term trend? It's been in place for nearly 2.5 years, and we've seen it go from like $11 up to $126 in March of this year. So I think it's a really interesting market now. So an aggressive trade here, if you were so inclined, is to take the view the move by oil on Wednesday is something of an aberration. Okay, it's just an extreme move. The market's overreacted, and we're going to pull back at the very least into the range, sort of the $85 to $100 range. So it could be. So it's an interesting trade from a risk-reward point of view. If you wanted to be a buyer with a stop the other side of $80, perhaps it's an interesting one. The other angle to take is that we've got we've got the continuation of this downtrend in oil from June. So we're 3 months into that now, and actually, we are now, over the last few months, we're witnessing a new trend starting in oil. So the angle here would be to be a seller of strength. So And I don't know. I think it's one of these when markets turn around, from a trend following point of view, it gets difficult to try and figure out, well, where's the market going? But I think it's going to be, again, an interesting few weeks for oil as to where it goes next. So for me, I think if it started turning lower again next week and breaks below that low from yesterday, the low from yesterday was $80.95, then I think the risk is we do have this downtrend going on properly in oil. And my target would probably ultimately be a move down to maybe $65, the lows from December of last year, around about there. So I think oil is going to be an interesting market to watch next week. Let's see what happens with that one. Let's have a look at natural gas. Natural gas, I mean, this has been another tricky market. I think I do have a short on in natural gas in this account. So there is a short. Almost got stopped out of this short. So I went short the 11th of August at 8.5 with a stop at 10. The market didn't quite get to 10. So narrowly missed getting stopped out on that trade. But I think it's interesting, given that it's been so much in focus because of the energy crisis globally, and particularly in Europe with the pipeline from Russia and all of that. And I put the trade on the middle of August. The video's on the website if you want to go and watch the reasons why. But I put the trade on because, is it still streaming okay? I think it just sort of got stuck then. So I put the trade on in the middle of August, wondering if natural gas was going to struggle again up at 9.5. It pushed higher, didn't quite take me out, and here we are. Now, what would you do now? Well, I suppose, natural gas is a crazy market and we see massive volatility. I suppose the trade here is to be a buyer, actually. There's absolutely an argument for being a buyer of natural gas because we pushed out to another multi-year high. I think that's the highest levels since 2008 that we saw at the third week of August. We've got knocked back, and 7.5 was good support on the way up, in late July and early August. So from a risk-reward point of view, being a buyer at 8.07, where it is now, with a stop at 7.5, stop at 7, let's say, you're risking $1. But if this market runs back up to those old highs, there's $2 in the trade. So I think that's interesting. I'm going to stick with my short for now, but I think there's absolutely an argument based on what we've seen in natural gas for being a buyer now ahead of this old 7.5 level. So interesting to see what happens with that one. And the last two we'll do the cryptos, we'll do the Bitcoin. I think I did say last time round that it is interesting down here, Bitcoin. That is it building a base again? I wouldn't necessarily be in a hurry to do too much. I'm sure the crypto nutcases are getting excited by today's move, but we're sort of bubbling around here, aren't we? And this 17.5 level has been a floor for Bitcoin since June. Big trend still down in the crazy world of crypto, but maybe maybe it is building a base down here. If I had to do a trade on Bitcoin now, I probably would be a buyer, to be honest. I'd be a buyer wherever it's trading now, 21, put a stop the other side of 17.5 and forget about it and see if it turns around. I think we know that trends take a while to reverse. I still think being patient in Bitcoin is an absolutely sensible thing to do. Let's see the size of the move. When did it start moving? 3 o'clock this morning. Okay, who knows why. But I think it's interesting, down here at these levels with the old 17,500 lows. See what happens down there. So maybe we'll see a bit of a further recovery in the crazy world of crypto into year end. The same for Ethereum, obviously. Ethereum, big trend, still down from November last year. Resistance in at 2,000. It's currently trading at 1,700. Let's see what happens over the next few weeks. Do we see 2,000 taken out and the market try and stage some sort of a recovery? So, worth keeping an eye on the Bitcoin, but nothing too exciting at the moment. So like I say, interesting market for me next week. Absolutely still the S&P. Wouldn't surprise me if we had a bit of a sell-off after a strong couple of days. But again, the test will be if it does sell off, does it hold above that most recent low? Okay, so let's see what happens. And the other interesting one, the dollar index anyway, because it always is, but also this crude oil price, because the big trend is up, and it's had a poke, the first poke below that trend line since it's been going. So let's see what happens. So I think for me, I'd be quite happy with oil to sit on my hands for a bit and see how this resolves itself. But I think it is quite interesting down here to see if we've got a new trend underway. We've just looked at natural gas. Someone's put natural gas in the chat. We just looked at natural gas. You can once we finish the live stream, you can watch the recording because it gets recorded. But we did look at natural gas. So I'm going to jump into the questions in a second. But first of all, just to rattle through the contact details again. Capital.com to find out more about the company. Open an account, open a demo account, all that sort of stuff. David.jones@capital.com. Any questions? At Jones the Markets, follow me on Twitter. JonesTheMarkets.com is my website. A bit more about my trading approach, results, and the training course I run. And of course, follow Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at the question. So the first question is about coffee. I've got a trade on coffee, and it's pretty boring. I've got a trade on in my own account that I've had for a few months on the price of coffee. The big trend for coffee, absolutely, still up. I just bought the US dollar index. That order got filled. Big trend on coffee is still up, but it's just flat, isn't it? Since March now, it's just 6 months of coffee flatness is what we've had. I'm still long. I'm happy to stay long. I suppose you could make an argument that it's come back near the trend line and it's bounced. So for me, I'm still reasonably optimistic of a run back up to 260 at least, the February highs. And that's it really. There's nothing really too much exciting I can say about coffee. If I didn't have a trade on, perhaps I'd wait for a dip, wait to see if we get a bit of a dip in coffee. But the big trend is still up. So for now, I'm happy to stay long. It's been a good market for me in 2021. This trade, I'm slightly in profit, but it's a little bit dull. So that's all I can say about coffee. Which reminds me, I did a trade on wheat this week. I don't know if we cover wheat. We don't, do we? Our London wheat futures, we don't have much data. Hold on a second. Let me just bring it up somewhere else, because I thought this was an interesting one. Wheat. So I did a trade on wheat because the big trend is up. The big trend on wheat is up off the August 2020 lows. It touched, with the whole Russian invasion of Ukraine, obviously, because that part of the world is so important for wheat production. Ran up to 13.50. It has, got really clobbered since then, but it's come down to the longer term uptrend. So I bought in this week, wondering if we'd get any sort of bigger recovery in wheat. So I thought that was an interesting one this week. We'll see how it works out. Have a look at XLE Energy. XLE Energy Selector. And we've looked at that before, haven't we? Looks better than oil for the past few weeks. So this is the SPDR, the ETF, exchange traded fund that tracks the energy sector. I'm guessing on a New York Stock Exchange or something. The trend is up, isn't it? But the question is, for me, would I buy it here? And no is the answer to that. I'd rather buy a sell-off. If we got a sell-off again, back to 68, back to where it was in July, I'd be a buyer of that. Absolutely, the trend is up. So if I was in the trade, a bit like the coffee trade, the trend is up, so I'd stick in the trade. But I don't know if I'd put a new trade on here, would be my thinking for that one. But I suppose if you looked at it much more shorter term, if you looked at an hourly chart, so if you looked at it from a different time frame point of view, there's an argument, for being, that trend is still pretty much up. So there's an argument for being a buyer there with a stop maybe at 74 as a more aggressive short-term trade. But for me, for a daily, absolutely the trend is up, but I'd rather buy a sell-off. So there we go. Can we have a look at Renault? I've already bought at $21 and I'm struggling to put my stop loss to keep my gains in case of a crash. You bought at 21. Is it 21 euros? 21 euros? Yeah, 21 euros. I don't know. Well, for me, I mean, if I was in that, if I was in that trade now, for me, probably the closest I would want my stop loss would be at 26, because I would want to give it a bit more room, because it's made a good recovery. I'd want to give it a bit more room to maybe have a push up to 31 again, and if it broke 31, then think about moving the stop. So for me, you know, I clearly what you do is completely up to you. I would be quite relaxed about that, and the closest I have the stop would be 26. That's how I would do it. But definitely moving stop losses is an art rather than a science, and most people do it wrong, I think. And I don't do it by any stretch of the imagination the perfect way, but I always want to try and give the market space to try and make me some more money. So I'd have a bit of a relaxed one on that. I wouldn't be worrying about a crash. Famous last words. We'll come in on Monday and their price will have halved or something. But yeah, it looks pretty positive, doesn't it? Right, the China A50. China A50. I would be a buyer, I think, of that one. That's quite interesting, that one. Let's have a look at this trend from... So it peaked in February 2021. And we've had that trend. So I think the question here is whether you think the trend for the China A50 is over, the downtrend's over. I would make the argument that maybe it is. You know, we had the run up in July, took out these old highs. So for me, we'll do this trade. I don't know if is it open? Maybe it's a 24-hour market. I don't know. So for me, I would do it, but I would have my stop loss the other side of the March low, because I take the view, well, if the thing's going to turn around, I want to give it room to turn around. And I don't want to get taken out in the noise. So maybe there is a trade here. So 12,389 was the low. So let's say, why is my account defaulting to that? Let's say we go 12,300 for a stop. Where's the market? We'll put an order in to buy 13,400 and £100 risk as usual. So that'll be 0.1. 0.11. 0.11 of a contract. Yeah, that'll do. Let's do that. There we go. I think that's an interesting one. That's it. Quite an interesting longer term chart, the old China A50, as to whether it's going to turn around. So I think that's well worth keeping an eye on in the months ahead. What do we think about Intel? Let's have a look. I think from memory, I think Intel is quite a boring stock, but maybe it's changed. No, it hasn't. That's really bombed, isn't it? I mean, that trend is absolutely still down. So Intel is trading in its lowest levels since 2016. So we're at a 6-year low for Intel. I would absolutely be looking to sell short into strength. I bet most people are long Intel. Let's have a look. We haven't got the data. Maybe there's not that much interest in Intel. Okay, fair enough. Okay. Yeah, for me, that trend is still down. The risk is any rallies like we've seen since April 2021 just end up getting sold into. I mean, it's really got absolutely tanked, hasn't it, since July. It's lost 30% in about 6-7 weeks, Intel. So yeah, still looks pretty weak to me. So yeah, we looked at natural gas, Uniper. Have we looked at these before? Uniper, or do we not have them? I don't think, oh yes, we do. Uniper. Oh my God, that's horrible, isn't it? What do they do? Germany-based company offering large-scale power generation and energy trading services worldwide, blah, blah, blah. Okay, horrible chart. Just still weak, isn't it? It's gone from 42.5 in December to 5 today. So that, for me, absolute barge pole stock. Wouldn't touch it with one. So for me, I mean, the risk is, when they get so bombed out, and I think the appeal is, the thing has dropped, 85% since December. And again, the naive investor would think, oh, this thing's dropped 85%, it can't go any further. But of course it can. It can drop another 85% from €5, can't it? So for me, no interest in that at all, unless it's selling into strength, trying to sell short into strength. But no, it's a horrible looking chart, that, isn't it? Dollar, Hungarian forint. We've looked at that before. Dollar Huff. Lovely trend. I need to adjust that trend line a little bit. I would absolutely be a buyer, not today, because it's still going down, but I would be a buyer of dollar weakness on that. So it's interesting. 380 was a big level, big short-term level in August. Is that going to hold again? I would be looking for the bounce in dollar, Hungarian forint. So yeah. Natural gas. Any chance you can link to your YouTube channel in the chat? I've set it up, but I haven't actually done it properly, unsurprisingly. So it's going to be called David Jones Trading on YouTube, but I searched for it before I came on today and it didn't come up. So that's the name of it. So when I sort it all out, it will be there. But if you follow me on Twitter or drop me an email or something, and I'll make sure you know about it when it comes in. So I will be doing live streams and stuff like that from there. Why do brokers show different candlesticks even if they use the same server time? Does it have to do with liquidity providers? It really shouldn't, because if you're looking at a candlestick of, let's say, the S&P 500 on an hourly chart, it should be the same. It should be pretty much the same across the board, because it's an hour, it's a time slot, isn't it? So I must admit, I look at a few other brokers' charts. I don't notice a lot of difference between them. But I look at fairly mainstream markets, so I'm not sure. But it should be, in theory, it should all be the same, because it's the same sort of prices. So yeah, I don't understand that. Uranium, I don't think we cover uranium because I think it has come up before. There's the global Uranium Etf. Let's have a look at that. Which I'm guessing tracks a bunch of uranium companies, involved in uranium mining. So for me, I think it's interesting. As you could make the argument, this is the Uranium ETF, this isn't uranium. You could make the argument that the trend, we've only got data going back just under a year. The trend is still down. So arguably sell short. But so for me, that would be the trade. If I had to do a trade on the global uranium ETF, I'd be selling short, assuming it's going to run into trouble again. I don't know how that translates into the price for uranium though. LEU, what's LEU? Don't know what LEU is. Can't help with that one. Sorry. Aussie dollar, yes, Aussie dollar. I think it's quite interesting, these Aussie and the New Zealand dollar, because the New Zealand dollar is breaking. Let's have a look at the New Zealand dollar first, if that was the one I was thinking about. Did break briefly to its lowest in quite some time this week. So it was a 2-year plus low. Aussie dollar, let's have a look at the Aussie dollar. Aussie dollar. I suppose there's an argument. I've been wrong-footed a bit, I think, in my last couple of trades in the Aussie dollar. There's an argument for being a buyer, and the risk-reward is good. So there's an argument for saying, that low from July, 66.80, has turned out to be an important low, and the market's bounced off it. So if you really wanted to buy the Aussie dollar, there's definitely an argument for being a buyer. But the flip side of that, we do still have lower highs and just about lower lows. So is it still in a downtrend? So I think it's a tricky one. If I had to do a trade now, I'd probably rather buy a dip from here, but in reality, I'd probably rather do nothing. But it is interesting that, we're back to this level, and this level was the lowest again since June 2020. It has held this time round, but the trend for me is still down. So I think it's quite a confusing one, the Aussie dollar at the moment. So that for me is another sit down and try and figure it all out. Southwestern Company, stock and natural gas. Southwestern Energy? Is it that one? Third largest explorer of natural gas. That'll do, isn't it? Again, I'd be a buyer because the trend. But would you buy now? That's the thing, isn't it? The trend absolutely up since there. I'd rather buy a dip than buy it here at $7.50. If we had a bit of a dip, down to 6. It looks interesting, but absolutely for me, if the trend is up, I want to be a buyer. It's just a question of where would I buy. So, can we talk about Tesla? Yeah, let's have a look at Tesla. We haven't looked at those for a while. They've had the share split, haven't they? Tesla's drop. What's the drop in Tesla? Do you mean the shares? If you're looking at something that hasn't adjusted for the share split, it might look a bit odd. But I think overall, again, it looks a bit boring at the moment, I'd have to say, Tesla. I'd rather be a buyer than a seller, but I'd still rather sit on my hands. And there's been a few of those today, hasn't there? Where you just think, well, actually, I don't think it's really that conclusive. Not for me, anyway. If I was a buyer now, where would I put my stop? Probably the closest I'd have my stop, the other side of the late July low at 256. But it just looks a bit range bound, doesn't it? You know, a lot of the excitement has absolutely disappeared from that stock. Let's have a look at Apple actually while we're looking at Tesla. You know, we had a great trend in Tesla, and then since this year, it's all gone a bit scrappy. But let's have a look at Apple, because they announced the latest versions of their phones, didn't they, this week? Let's see what the market thought of that. Not very much, by the looks of it. Again, I'd rather be a buyer than a seller, but it's all a bit sideways over the last 12 months, isn't it, Apple? So nothing too exciting. Nothing too exciting there. Harley Davidson. Let's look at Harley Davidson. Davidson, what's happening with that? See, again, that looks boring to me. You know, it's a lot of these stocks are just stuck in ranges, aren't they? So for me, if I had to do a trade on Harley Davidson, what would the trade be? I would probably want to be a seller. I'd want to be a seller because we've got $44, big resistance. That would be the trade I do to see if we at least pull back to the lower end of the range. But again, if we look at the last 12 months, that is a sideways trend. Yeah, so trading on the extremes, selling strength and buying weakness, but not too much in terms of a big directional trend to follow. So that looks a little bit of a boring one as well to me today. Regeneron. Wow, that's gone a bit nuts, hasn't it? What's happened there? Regeneron Pharmaceuticals, biopharma company, discovers, invents, develops, manufactures, and blah, blah, blah. Okay, does all the bot. Now, I would take the view here. I tell you what I would do. I would sell short. I would take the view, whatever's happened with Regeneron, let's have a quick Google to see if they found a cure for something or other. What's happened here? ILEA data, Regeneron. Oh, Regeneron's souped up ILEA data, Oars analysts. Okay, so it's come up with some eye drug that people think is great. Okay, good for them. I would sell short though. I would take the view the market's overreacted and sell short. So I go short now, let's say, with a stop above 760 and take the view the market has maybe overreacted to this. But again, if we looked at the last 12 months or so, it's all a bit sideways, isn't it? There's a lot of just sideways stuff going on at the moment. VIX, look at the VIX. I never ever trade the VIX. The VIX is the volatility index because we've had a rally over the last couple of days in stocks. The VIX has dropped off. It's just a bit boring. It's a bit boring again. There's a lot of boring stuff today. It's not the most exciting live stream, is it? There's a lot of stuff that's just dull. There's the VIX. What can you say about it? You know, it went crazy earlier in the year when markets were tanking. That's exactly what the VIX does. And now, because we've seen a rally, it's selling off. So nothing too exciting there. Centrist Energy. Let's have a look at Centrist Energy. I don't know if we cover them, but we'll have a look. Centrist. No, we don't cover them. Sorry, Centrist Energy. Whitehaven Coal. Whitehaven Coal. We don't cover that one either. Oh yeah, yes we do. Hang on. That is a trend, isn't it? Finally, we've got a trend. So Aussie company. Great trend in Whitehaven Coal. Can't trade them because they're closed at the moment, obviously, because the Australian market's closed. So we'll go back to Jan this year. How much have they moved this year? They've gone from 2.5 Aussie dollars to almost 9. So again, great trend, obviously, in the stock. If you bought it now, where does your stop go? That's always the tricky thing I have with these runaway markets. Where are you going to put your stop loss? For me, perhaps the trade I would do, if it breaks out again, be a buyer at 9 and have a stop the other side of 8, which is a pretty tight stop based on the volatility. But absolutely cannot argue with that trend in Whitehaven coal. So yeah, great uptrend in that one. What about Nvidia? Nvidia, the chip company, or the graphic, whatever they're called, graphics cards and stuff. But clearly has suffered from the chip shortage this year. I mean, that to me still looks pretty weak. You could take the view that it's a bit oversold and do a bit of an oversold bounce type trade down here with a stop the other side of that recent low, which is 132. Personally, I'd rather see, do we get a rally back up to 180 and go short because the trend is down. So you know, it wouldn't be surprising maybe we see it try and claw its way a bit higher. But let's not kid ourselves what the big trend is or has been in Nvidia all this year, and it's down. Mara, what's Mara? M-A-R-A. Marathon Digital Holdings, is that the right one? Marathon Patent Group looks horrible to me, but so it's gone from 80 down to 13. I don't know. I suppose you could take the view, is it trying to stage a recovery? If you believed, I mean, personally, I never trade stuff like this. But if you believe the recovery, you'd be a buyer with a stop loss. The closest I want my stop would be the other side of 10. It's had a bit of a gap higher today on some news, clearly. But yeah, maybe. But again, for me, you know, we've had this big downtrend in place. The question is, has it reversed that downtrend? I suppose there is the argument that it has. So if I was a buyer now, the closest I'd have my stop would be the other side of 10. Can we look at Halfords? Yeah, look at Halfords. They did have a period, didn't they? This is the UK car big retailer. They had a period where they're doing really well. And they've just done terribly, haven't they? So they did well. Because it pandemic related. I mean, it clearly was. But terrible since then. So for me on Halfords, the trend is absolutely still down on Halfords. If we picked up on, I don't know, that, say. You know, it's gone from a year ago, £4 to £1.50 today. You know, and it's only in the last week or so, it made a new low for that down move. So for me, even though it's rallied a lot, it's rallied 20%, you know, it's still down 60% over the last year. So for me, I would still be tempted to be a seller of strength, to be honest. For me, that trend on Halfords still looks down on that. Can we have a look at the XBI ETF? XBI. What's the XBI? I don't think we have it, whatever it is. So I can't help with that one, unfortunately. National Grid could be a buy along with SSE. I did have shares in National Grid. I sold them. They were a good dividend yield. National Grid. Where is it? National Grid. And I sold them. But I do keep an eye on them in case I sold them out on the way down. And I think you're right actually, because National Grid is another one that's got a good, or did have a good, long-term trend. So this is the UK stock power provider thing, energy company. Yeah, so I would agree with you on that. So if I was a buyer today at £10.70, the closest I want my stop would be underneath the low from June, about £10.20. What's the yield on National Grid at the moment? I bet it's still got quite a good chunky yield, isn't it? Good dividend yield. Let's have a look on another screen. 4.8%. Okay, so it's not bad. So yeah, that's an interesting one. That one, National Grid. Of course, Halfords went everyone on a bike, didn't they? You've reminded me. Yes, it was the pandemic, and when they were all buying bikes, and you couldn't get them, could you? You couldn't get bikes for love nor money. So thanks for that. Halfords and Kingfisher were both hit hard by COVID reopening. Alibaba, the old favourite, Alibaba. Oh, I'm still short Alibaba. Looking at that, I'm still happy to stay short as well. Maybe not. Maybe not. I suppose there's an argument. There's an argument here that finally it's making a base, Alibaba. So we're sort of having a go of breaking out of that downtrend. So there's definitely an argument to think about being a buyer in Alibaba. If I was a buyer now at 92, the closest I'd want my stop though would be the other side of that March low, the other side of 71. So I think it's interesting that maybe finally it's breaking out of its downtrend. There's the trade. We did the trade on the 17th of June. So sold it at 105. Let's put that stop loss to break even because I always forget to move these stops. What else have we got that's interesting in these trades in here? Short euro chuff. Short gold. Oh, I should maybe think about... there is a break even stop on that. There's nothing else that interesting. Oh, short Nvidia. That must have been in a live stream, 29th of July. Short Nvidia from 180 and now they're 142. Good trade. Let's put that stop to break even as well. Dollar index, that was that trade that just got done actually today. So bought the dollar index, up £3 on that. And then I saw the China A50 trade went through as well. So that's got done as well. So let's see how that all works out. Erst. What is Erst? No idea, but we don't have it. Do you think the big crash is coming? Would you like to narrow that down to what market this big crash is going to happen? If you're talking about stock markets, I would say no. I think we've had the big crash. You know, if you look at something like the Nasdaq was off. If you look at the high from last year, 16.8 down to 11,000. So if I do the maths on that, what's the maths look like on that? So 16,800 minus 11,000 divided by 16,800. Yeah, it sold off 35% the Nasdaq from the November high into the June low. That's a pretty big move, you know. So I don't think there's a big crash coming, and I'd be really skeptical if anybody is pushing the big crash or the Great Reset, the whole WEF conspiracy thing, and microchips in vaccines and all that nonsense. So I don't really believe that there's a big crash coming. I think we've been through a really tough year. I wonder if we're near peak inflation. I don't think stock markets are going to go racing away upwards, back up to the old highs anytime soon. But I do wonder, have we seen the worst? Let's see. Let's see what happens. We looked at the FTSE, Hong Kong 50. We didn't look at that. We did look at the China A50. We'll have a look at the Hong Kong, which I'm guessing is probably not going to look too different. Yeah, again, there's an argument there. There's an argument for being a buyer. There's also an argument in the Hong Kong 50 that the trend is absolutely still down. Yeah, but there's an argument if these old lows hold for like a trading buy. Yeah, the old lows from March are at 18,000. So if you absolutely wanted to be a buyer with a stop, I wouldn't do it, but with a stop the other side of 18,000, the big trend still looks to be down. So, but interesting that the 6-month low has held in the Hong Kong 50. So there we go. Thanks for showing us how others are doing. 75% lose money. We all make mistakes. Yes, we do. But do they not research the basics, such as Bank of Japan interest rates compared to FMC? It's not even that, John. The basic mistake people make has absolutely nothing to do with interest rates or candlesticks or RSIs or inflation. The basic mistake people make is two basic mistakes. They trade against trends, so they'll absolutely go against a major trend in the market, and they don't manage risk. Most people do not use stop losses, for example, because they might believe there's some crazy conspiracy against them to move the market to take out their stop, or I think in most cases they don't want to face up to the fact that they're wrong. This will never change. In 50 years' time, who's ever doing this live stream, beaming it directly into the Bill Gates microchip in your head, will be talking about the same numbers. 70 to 80% of people lose, and because we're not, I think our brains are not particularly well wired up for trading, and that's why people lose. But going against the big trend and not managing risk, absolutely the mistakes people make time and time again. Can you explain that net short, net long thingy? Is that over a certain period or based off open positions? That is based off clients who have a trade on at the moment. So this, if I look at this in the euro, so euro dollar, 65% are buyers, 35% are sellers. Clients who still have an open position on the euro with us, 65% are positioned for the thing to go up, 35% are positioned for the thing to go down. So it's I can almost guarantee you, if you see a strong trending market and you look at client sentiment, you can almost guarantee that most people will be the wrong way around. Not so much in the dollar index. Maybe that has a slightly more sophisticated trader like what I am. But still in the dollar index, after this fantastic run over the last 18 months, 30% of open positions are still short. Whereas I would suggest the least painful side of the market, based on its performance, is looked to be a buyer. So that's the whole net long, net short thing. I hope that explains it. I'm going to have to wrap things up now because I finished and it's half in. I've got to go and jump on something else. But that's a really good point. The last point in the comments, absolutely 100% agree with this. The mindset of allowing you to hold on to your winners is key, completely. This is why, if you look at my big winners over the last few years, dollar index, and I've had a trade on the dollar index all the way up and added and taken partial profits, but always had a position. S&P and NASDAQ last year, just running the positions. I have got no interest in where the market is going in the next 5 minutes, the next 5 hours, or the next 5 days. What I'm trying to do is latch in to a big trend in the market. And most people don't. Most people are far too short term. Most trades with us, for example, about 50% of trades with us are closed out within an hour of the trade being opened. Me, I think that is absolutely ludicrous, because that is, just market movements are random a lot of the time. People are trying to predict randomness rather than trying to find a big trend in the market. So there's another reason why most people are losers. But to find out more about that and how to combat it, go to my website, jonesthemarkets.com. But no, it's a very good last point made in the comments. Okay, we're going to wrap things up there. We'll do it all again next week on Friday. It'll be the last one I do. So hopefully you can make it along to that. Go to Capital.com to find out more about the company, open an account, all that stuff. David.jones@Capital.com if you have any questions. @JonesTheMarkets on Twitter. JonesTheMarkets.com is my website. Follow us on YouTube, Twitter, and Facebook. And like I say, the big markets for me, I think oil is interesting for next week. Stock markets are interesting. Have they turned around? Dollar index, always interesting because the trend is so strong. Okay, that's it. We'll wrap things up there. Enjoy the rest of your day and hopefully see you again next week.